welcome to the video. This is another forex market strategy. As you all know that I don't actually like trading forex. What I do most is volatility index, step index, boom and crash. But I also have strategies that works perfectly on the forex market. So this strategy I'm about to show you today is basically for gold, the gold market. As we all know that gold is one of the easiest way you can actually make a lot of money in the forex market. If you trade gold, you don't even have to pay attention to other markets. But one thing I want you to know is that a trader must be very disciplined for you to be a very successful trader. You have to follow your rules and apply proper risk management when trading these markets. So this strategy works perfectly in the forex market, but I'll be showing you examples in the gold. One thing I want you to know is that if you want to be profitable in the long run in this forex market, especially for currencies, you have to be a swing trader. Although there are some scalpers trade for a long time, but if you want little knowledge and be accurate almost 80% of the time, you have to be a swing trader. Swing trading is one of the easiest way you can trade the currency market. So if you look carefully on my chart, I am on the 4-hour time frame, and this is XAUUSD, which is also known as GOLD. On my chart, I have series of indicators. I have Ishimoku, RSI, and the moving averages. So when you apply the Ishimoku with the RSI, it is also perfect, but when you use the moving average with it, we give you a very perfect entry, help you to avoid fake outs. So the RSI shows us the overbought and the oversold level. The level around the 10 is the oversold level, while the level around the 90 is the overbought level. As we all know that when market enters into the overbought level, it is likely to sell to the downside, and when market enters into the oversold level, it is likely to buy to the upside. So the Ishimoku over here helps us to know exactly when market has entered that level, and the moving average helps us to know exactly when market has changed trend. Anytime the candles is above the moving average, we know that market is in an uptrend and we can hold our trade. And whenever the candle is below the moving average, we know that we are in a downtrend. So the time frame we use basically for this strategy is just the 4-hour time frame. We look for our direction and our entry in the 4-hour time frame. Don't worry, I will show you how you can easily do that. So first thing we want to do is the zoom level. You zoom out to the maximum. This is the innermost zone. You zoom out. So this is the maximum zone. So what are we looking for? So we want to see the Ishimoku enters into the 10 level. As you can see over here, we have an entry into the 10 level. Then we wait patiently for when we have a cross after it enters the 10 level. So if we want to go uptrend, we want to see the black moving average goes below the purple moving average. You can enter your buy immediately. You can use stop loss if you want, and you may not use stop loss if you want. It all depends on you. But one thing I want you to know is that stop loss helps you to prevent your capital. Make sure that you use lowest lot size, or you use this lot size that you know that you can afford to lose. As well know that this is the higher time frame, the 4-hour time frame. The lowest lot size we use here will be risking more than when we use it in the 30 minutes or the 15 minutes time frame. We have our buy here. You can put our stop loss here, but here we are not using TP for this strategy. So we are only waiting for when this moving average crosses each other again. So once you have the cross, then you close your trade. So you see over here, market continues to melt to the upside, then you have a cross around this point. And immediately you have the cross. This is also a sell opportunity, because if you look carefully, market have entered into the overbought level. You have it at this point. So once you have that, you wait for the cross, you will enter a sell. We don't use TP. Remember that you can put your stop loss above here or above here, but we don't use TP. So we only close our trade manually when this Ishimoku enters into the 10 level. But most times I prefer using the moving average, because the moving average helps me to cash a longer move. Let me show you an example what I mean. You see over here, you enter a buy, you hold your trade, you close at this point. But one thing I want you to know is that this is a fake buy signal. That is why I use the moving average. So you see the market continues to go in an upside. If you had followed this signal, only Ishimoku, and you sell to the downside, the market continues to buy to the upside. So you see over here, you hold your trade up to this point. So back to our example, you close your trade once you see the cross. You see the market enters into the 10 level again. This is telling you that from the weekly or daily time frame, market has been in an uptrend. So you see that you see a visible cross, that the black is below the purple. So once you have the cross, you enter a buy again, then you hold your trade until you have a cross in the moving average. So we see that we are still in an uptrend. This is the current market as at last week. Like I said, it also works perfectly in the currency market. So let's go to GBP USD. So let's start from this point. So we see our market has been in an uptrend, goes into the oversold level, which is telling us that market is still going in an uptrend. So in the weekly or daily time frame, market has been bullish. So here, enter the 10 level, we wait for the cross, we enter our buy at this point. Stop loss, you can place it here if you want, but most times you don't have to use stop loss, you just have to close your trade when you see the cross drop. Enter this level and you have a cross here, you close your trade. So here you can sell immediately because market has entered into the overbought region, which is the 90 level. You can have your sell at this point, stop loss above this high, then you hold your trade until you see there is no cross between the moving average. It's come closer but did not cross. You have a cross here. So immediately you have the cross, you see market enters into the 10 level again. Then you wait for the cross of the moving average that is also used as your exit point. So you can buy immediately, then you hold your trade. So to the current market, we see our market is still going in an uptrend. Hope you understand what I'm saying. So if I go to my Euro USD also, it is the same principle. We have a sell to the downside. How did this sell happen? We see the Ishimoku enters the overbought region. It enters here, but we did not have cross in the moving average, so we wait patiently for when we have a cross. So we have the cross here. We enter a sell, stop loss above here, and we hold our trade until we see a physical cross. You see distance we are able to cash. So this is telling you that this strategy is very, very powerful. So over here, it enters the 10 level. Immediately you have that, you see a cross, you can enter a buy, stop loss below here. But you see the market come back to cross each other, taking us in a drawdown. You can close here, then wait for another cross again, you enter a buy, stop loss below here, then you hold your trade. You see currently market is still buying to the upside. So for the coming weeks, I can tell you that the Euro USD is still bullish. So now let me show you settings to my indicator. First thing you do is to click on this indicator icon over here. Like I said, I have just 3 indicators. I have the moving averages, relative strength index, and Ishimoku. To select the first moving average, click on the F icon on the main chart. This is moving average. Make your period to be 200. This is for the higher time frame, monthly and weekly time frame. Shift is 0. Method simple. Apply to close. Style 2 pixel and select color of your choice. After that, click on save. For the second moving average, click on the F icon on the main chart. Moving average, click on that. Make your period to be 50. Shift to be 0. Method to be simple. Apply to close. Style 2 pixel and select color of your choice. After that, click on save. For the RSI, click on the F icon on the main chart. Scroll down a bit. This is relative strength index, RSI. Click on that. Make your period to be 1. Apply to close. Style 3 pixels. Select color of your choice. Levels, click on this pen icon to add level. Click on this add. Type 90, 50, and 10. Style, make it 2 pixels and select color of your choice. After that, click on save. And for the last indicator, which is the Ishimoku, click on the F icon on the indicators Windows 1. This is Ishimoku. Click on that. I can't pronounce all these things, but make this to be 5 pixel. Make this to be 2 pixel. Span B, make it 52 pixel. Fill it. Click on this fill. Make these 2 style to be 1 pixel and select color of your background. Up Kumo, make it 2 pixel and select color of your choice. Down Kumo, make it 4 pixel and select color of your choice. Shinku span, make it 2 pixel and select color of your choice. After that, click on save. So if you follow my settings correctly, your chart should look exactly as what you see over here. After this, I want you to go back on your chart, backtest this strategy, go as far as you can, see for yourself. You don't have to believe everything I say. You can go on your chart and see for yourself. Go on your demo account, trade it in a live moving market. That is also very important. You can test it for 1 to 2 months. perfect your entry with this strategy, as we all know that it is a swing trading strategy. If you find this video helpful, don't forget to like this video, subscribe to this YouTube channel, turn on the notification bell so that you get notified anytime I release a new video. You can also check out my other videos that are displaying right now on your screen. Thanks for watching.